Welcome back. Previously, we were discussing about preparation of fund flow statement, and let us discuss some of the adjustment and application level cases that comes under the preparation of fund flow statement. Next case. From the following details as per the period 2014 and 15, you are asked to prepare fund flow statement. For the time being, we are using an abbreviation FFS. Kindly don't use such abbreviations in the examination. A comparative balance sheet of a concern is given. If you go through it, you can see some of the items is new and some are dealt previously. And let us go with the additional information. There is nothing much information, only one. During the year 2015, plant costing rupees 15,000 was sold for 5,000. Loss on sale being charged to profit and loss account. And we have dealt the similar type of adjustment previously. Whenever a sale of an asset is given, at the same time a sentence like this is given. The plant costing 15,000. Here the cost is given, and the bracket accumulated depreciation is given, and the sale price is given. And you know how to find the loss or profit on the sale of that particular asset. And regarding the comparative balance sheet, if you go through the items given in the balance sheet, you can see some of the items are quite new. Here capital reserve is given in the bracket, it is given profit on redemption of debentures. Share premium is just similar to a share capital. How usually you will be following a step for change in the value regarding share capital. The same pattern is followed in case of a share premium. There is no much difference. In this case, P&L account is given, two amounts are same, so it doesn't affect our computation. And another item, profit for the year, is given, it's okay. Then we will start with this amount. Debentures, tax account, proposed dividend. I am not mentioning again and again regarding the tax and proposed dividend. You all guys might have remember the concept regarding proposed dividend and tax. And in the asset side here, a new item is given, depreciation. Actually, this is a provision for depreciation, and previously this provision for depreciation was given in the liability side. Instead of that, you can write it in the asset side by giving the amount within the brackets. And here the net value of the asset is given. And shares in subsidiary company, it is actually an investment. Since the both amounts are same, it doesn't affect our computation. And rest of the items have been dealt previously in different cases. So let us begin with the computation part. Here is no much adjustment information, only one information is given. Let us deal with the computation. So we begin with preparation of schedule of changes in working capital. And you guys all know how to prepare a schedule of changes in working capital and what all items comes under schedule of changes in working capital. And the pattern of preparation is like this. The question was like this, consisting of liabilities and assets, actually a comparative balance sheet, and you know what all items has to be taken in the schedule of changes in working capital. Let us begin with the title, and followed by that particulars, the period. Remember to write the period. The first year has to be written first, and following year has to be written in the second column. Following that, the next columns are increase in working capital and decrease in working capital, and you know the rules regarding the preparation of statement. We will begin with current assets, and if you go to the asset side, there are current assets, stock, debtors and bank. So let us write each one. First one, stock. In the beginning it was 45,000, by the end it was 49,000. So there is an increase in the current asset, so it has to be shown in the increase in working capital side. Next one is debtors. In the beginning it was 15,000, by the end it was 18,000. Again there is an increase in the value of current assets, so it leads to increase in working capital. So the difference amount is shown in the increase in working capital column. Finally, bank. In the beginning there was 25,000, by the end it was 48,000. So again there is an increase. So all these current asset was increased during the year. So the difference amount is shown in the increase in working capital column. Since there are no other amounts or items regarding current is given in the question, let us take the total of current assets. So the total of current assets, remember you need to take the total only regarding the first two columns. Once you find the totals regarding the two columns, next let us go for the next part, current liabilities. It has to be in the liability side. If you go through it, you can see that there is only one item, that is creditors. See, all other items are non-current items. Here see, you can see that tax account. Previously in one case we took tax in the schedule of changes, and you know why we took tax in that case, because in that case it was mentioned in the information that you need to treat tax as a current liability. Since there is no such information given in the question, you need not have to worry about preparation of schedule of changes. So in this case, there is only one item, that is creditors. In the beginning it was 60,000, in the end it was 1,04,000. So again there was an increase in current liability, and remember the rule of regarding the current assets as well as current liability, it is quite different. Here the increase in current liability leads to decrease in working capital, so the difference amount is shown in the another column. Since there are no other items relating to current items, so let us take the total. Here 60,000 and 1,04,000 is considered to be the total of current liability. Once you find the totals of current assets as well as current liability, let us find working capital. And you know how to find the working capital? By taking the difference between total of current assets and total of current liability, you will get working capital. 25,000 for the first 2014 and 11,000 for 2015. Once you find these two amounts, you just need to balance these two sides just like a ledger account. Here 25,000 is bigger, so let us take the total as 25,000. So the difference amount is 14,000 here. Once you deal with this part, then you go for these two columns. Here right hand side is a bigger value, 44,000. So here the difference is 14,000. And you know how to find the difference regarding these two columns. Since there is an increase in the value of working capital, sorry for the correction. After taking the total, you need to take the difference between total of current assets and current liabilities. By taking the difference of these total with this total, you will get working capital. In this case 25,000 and 11,000, and then you need to take the balancing of this figure. You can see that there is a net decrease in working capital. Previously there was a slight correction. See, you can see that here the decrease in working capital side is having the bigger value and compared to the increase in working capital side. So the difference amount is considered to be the net decrease in working capital. And remember, first of all, you need to balance these two columns. Then you will get a difference. In this case, it was 14,000. After balancing this side, you have to go for this side. If your computations and steps are correct, you will get the same amount in these two columns. So this is how you have to prepare a schedule of changes in working capital. Once you have prepared schedule of changes, next you need to find fund from operation. But before finding or preparing fund from operation, you need to prepare some non-current accounts. So this was the question. Let us deal with the preparation of non-current accounts. Before that, first of all, let us begin with plant and machinery, because here in the additional information it was said that plant costing 15,000 was sold for 5,000. So let us prepare plant and machinery account. Since it is relating to plant and machinery, you have to prepare plant and machinery as well as provision for depreciation, because here depreciation details are given, and at the same time depreciation has its opening and closing balance in the balance sheet. So let us begin with plant and machinery. First of all, note down that opening balance as well as closing balance, because there was no adjustment regarding that. Remember, if the provision for depreciation balances, that is opening as well as closing is given in the additional information. In that case, you have to add that amount with the opening and closing balance of plant and machinery. I hope you remember the first case which we have discussed. Okay, let us deal with the present scenario. The opening balance was 2,60,000 and closing balance was 3,20,000. Because you have to consider the preparation of assets at its cost. Always you have to do like that. Next one, in the question it was said that the plant was sold for rupees 5,000. So it is a sale. You can write as by bank in the bracket sale 5,000. Next details given in the question was accumulated depreciation. So let us write down the depreciation. Accumulated depreciation 18,000. And next you need to find out whether the sale was on profit or sale or loss. And you know how to find the profit or loss. Here the cost of asset is 15,000 and the accumulated depreciation is 8,000 is given and the sale price is 5,000. In order to find the profit or loss, you need to compare the sale price with its book value. Here cost is given, depreciation is given, so you can easily find book value. And here 15,000 minus 8,000, you will get 7,000. That is the value, book value of that particular asset, and that asset was sold for 5,000. So it is quite natural that sale was a loss. So since it was a loss, we can write P&L account in brackets. You need to specify the reason, loss, so 2,000. So there are no other item that can be recorded in this account, and the preliminary analysis you can see that these two sides do not tally or get equal. So it means there is a difference of certain amount in the left hand side, because if you take the total of the right hand side, the amount is higher than the left hand side. So here you will get 3,35,000, but here you have only 2,60,000. So it is quite natural. There is a difference amount and it has to be considered as to cash or bank, depends upon the detail given in the question. In the balance sheet, if it is given cash balance, so you can write cash. Since it is bank is given, we have writing bank. And in the bracket, you are writing it is purchase because it is a purchase case. And we have dealt with the same cases previously. Once you have prepared plant and machinery account, next you need to prepare depreciation account. Accumulated depreciation account has to be prepared because here it's opening and closing balance is given. That is why we are preparing accumulated depreciation. Otherwise, we do not have to prepare such an account. So first of all, let us note down the opening balance as well as closing balance. Opening balance of depreciation is 85,000, closing balance is 95,000. And in the question it is said that accumulated depreciation on the asset is 8,000. That is, depreciation charged on that asset is 8,000. So the accumulated depreciation account, it is written as to plant and machinery 8,000. See, here remember, whenever you are preparing a fixed asset account and its depreciation account, the depreciation amount shown here will be equal to the depreciation amount shown here. These two amounts will be always, in almost all the cases, it will be equal, unless it may be an adjustment case. In that case, the amount might be different. In usual cases, these two amounts will be equal. If you go through the account, you can see that these two sides again doesn't go tally or it will not be equal. So again, there is a difference in the right hand side. It has to be considered as by P&L 18,000. And what is the meaning of by P&L 18,000? It means a certain provision or certain amount has been set aside during the year for the depreciation purpose, or provision for depreciation made during the year. Remember the sentence, provision for depreciation made during the year. Whenever you come across a sentence like that, it means the amount specified in that sentence has to be written here as by P&L, the amount given in the question. Sometimes you may come across a question like depreciation provided during the year. In that case, that amount has to be shown here, and in that case, the balancing amount will be this one. In the course of computations cases, you will be dealing with such questions. So let us go with the further adjustment. So accumulated depreciation is complete. Once you prepare these two accounts, next you have to go for additional information. Since there are no other information, we have to prepare two more accounts, because even if there is no additional information, you have to prepare two accounts compulsorily. That is, in the question you can see that there is a tax amount and proposed dividend. So these two accounts has to be prepared compulsorily. First one, provision for tax, and you know the pattern for preparing provision for tax. Since there are no information regarding tax details is given, just note down the opening balance as well as closing balance. And you know how to prepare provision for tax and proposed dividend. And you all know how to prepare provision for tax. It has to be begin with recording opening balance as well as closing balance. Opening balance is 20,000, closing balance is 5,000. Since there are no other information, this 20,000 has to be considered as the to cash amount. That is to cash 20,000, and the remaining amount is by P&L. 5,000 has to be written again here. That is how you have to prepare provision for tax. Once you have prepared provision for tax, next is you have to prepare proposed dividend. It is just similar to the provision for tax computation. First of all, you need to write down the opening balance as well as closing balance. Then you have to write the opening balance as to cash and the closing balance as by P&L. Since the amounts are same, here all the amounts find it to be similar. So we have prepared all the non-current accounts. Next you have to prepare preparation of fund from operation. So let us begin with calculation of fund from operation, and the question is here and the computations of non-current accounts is here. Let us begin with preparation of fund from operation. First of all, net profit for the year is 45,000. It is already given in the question, and from that you need to add all non-operating expenses, and I have mentioned earlier it is quite simple. First of all, let us go through non-current accounts, and you have to go for all the P&L items. All P&L items, depreciations, losses, like that. First of all, let us start with provision for tax. Here provision for tax, there is one by P&L amount 5,000, that is recorded here. After that, proposed dividend, again here 10,000 is given, that amount is recorded. After that you have to go for C. Remember here accumulated depreciation account is already given, so you have to take this depreciation about 18,000 only. Never take this amount. This amount is taken when no provision for depreciation or accumulated depreciation account are prepared. In that case, you can take this depreciation as part of non-operating expenses in the calculation of fund from operation. After that, you have to go through the plant and machinery. You can see that there is only one P&L item, that is loss on sale, that is 2,000, that is recorded here. And once you complete a non-current account, you have to go through the information given. Since we have prepared all the accounts based on the information, you need not have to worry about information, but you have to go through the balance sheet. Remember, there are some items that has to be considered. Remember the order. If you have to look for intangible assets, preliminary expenses, miscellaneous expenses, discount on issue of shares and debentures. If any of these four items are found in the balance sheet, you need to take that items in the computation of fund from operation. Since there are no such information given in the question, you can go with the details which we have recorded now. You may think that there is one item that appears to be taken to the fund from operation. See here, one reserve is given. Whenever there is a reserve, the difference amount has to be taken to the fund from operation. But in the bracket it is said that profit on redemption of debentures. Here the 1,000 is created out of the profit earned from the redemption of debentures. So here that transaction has non-current items. We only consider those items in which the transaction has both non-current as well as current items. So we are neglecting this 1000, and let us deal with these amounts, and you will get fund from operation 80,000. Once you have prepared fund from operation, you have to prepare schedule of changes, statement of sources and application, otherwise known as fund flow statement. And we all know the format: sources, amount, application, amount. For preparation of fund flow statement, let us begin with the first item which we have prepared, that is net decrease in working capital 14,000. After that, let us take this amount, fund from operation 80,000. It is a positive amount, so it is a fund from operation and considered to be the source, so fund from operations. Now let us check various accounts and details given in the question. First of let us go through the accounts which we have prepared and look for to cash and buy cash items. If you see any cash or bank item, that has to be considered. No other items has to be considered during the preparation of fund flow statement. That is, if you are looking for items in the non-current account, you have to consider only cash or bank items. First of all, the plant and machinery, you can see there are two bank accounts. One is purchase and another is sale. Purchase is an application of fund and sale is a source of fund. So it has to be shown in the respective sides. After that, accumulated depreciation, there are no cash items comes in the accumulated depreciation. Next is provision for tax. There is provision for tax 20,000, tax paid during the year 20,000. Next one, proposed dividend. Again there is one cash dividend paid during the year 10,000, that has to be shown. Once you have gone through non-current accounts, you need to go through the additional information for the confirmation only, means you have to confirm whether you have missed any points or not. For that purpose only you have to go through the information, because you will be preparing accounts on the basis of information. Some items we need not have to prepare account. In that case, you have to go through the additional information. Since there are no items in the additional information, let us go through the items given in the balance sheet. In the balance sheet, you can see that first one, share capital 2 lakh and 3 lakh. Since we haven't prepared any account regarding share capital, we can take the difference 1 lakh rupees as a issue of shares. Next one, share premium. As I have mentioned earlier, it is just like a share capital. Difference amount is considered as a source or an application. In this case, 10,000. In the beginning, there was no amount. By the end, there was 10,000. It means 10,000 has been raised. So 10,000 is considered to be a source of fund. Next one, in the details, we know that there was redemption of debentures. Remember, while recording redemption of debentures, you have to be very cautious, because here you have written 24,000. But if you take the difference between 1 lakh and 75,000, you will get only 25,000. Then how come we are recording 24,000? You have to be very cautious while dealing with such scenarios. There are no additional information regarding debentures in this question. But in the balance sheet, it is said that capital reserve has 1,000 generated during the year, and it is out of the profit on redemption of debentures. That is, while repaying loan, you gained 1,000 rupees as profit. Here the debentures repaid was 25,000, and it is said that 1,000 is a gain while repaying loan, means you had paid less. So the actual amount paid in that case was 24,000, because here difference was 25,000, and it is said that there was profit in the repayment of debentures. 1,000 rupees profit means you paid less. You paid 1,000 less. So 25,000 is not the redemption of debentures. Here it is 24,000. So you have to be very cautious while dealing with such questions. Next, in the assets liability side, there are no other items. In the asset side, you can see that buildings, there is a difference, and we haven't prepared any account based on buildings. So you need to consider the difference regarding the amount. Here there is an increase in the amount of buildings, so it means during the year some amount was invested for the acquiring building. So it is an application of fund, purchase of building 80,000. So we have took almost all the amounts, and now you just go through the totals of the both side. Usually you will be getting a tally amount If there is any difference, it may be due to some computation mistake or careless mistakes. So if you take the total, you will get same amount. So this is how you have to prepare a fund flow statement. So just go through all these adjustments. We will be discussing different adjustments and cases throughout the classes. So just go through it, familiarize the concepts, follow a pattern according to your discretion. So that's all for today. Thank you.